Hi, everyone. It's Chad Bergman with Movement Mortgage, and I come to you with a great guest today. We have Jordan Goldberg with Xactus. And Jordan, welcome. Thank you for the opportunity to go through a couple big topics this summer of 2022.
Hey, great to be back, Chad. Thank you very much.
You bet. Well, again, you have a wealth of knowledge. We hit on a lot of topics the last time we talked. But there have been some big changes as of July, and then some other things that are coming up on a reoccurring basis. So I want to get through those really quickly.
Sounds good.
Well, good. Well, again, headline news, July 1st. What was the big change with medical collections?
So yeah, that was a huge announcement, big win for consumers. The three bureaus, Equifax, TransUnion, and Experian, they decided to no longer report paid medical collections. And so if it's an outstanding medical debt, you haven't paid it yet, it will still be on your credit report. But if you had paid medical debts, paid medical collections that were on your credit prior to July 1st, those were deleted, removed, gone off your credit report as of July 1st. So that's a huge win for consumers. If you still have outstanding medical collections, now's the time to take a look at those, revisit, maybe negotiate, pay for less. As long as there's zero balance and they reflect zero balance owed on your credit report, the bureaus will delete them. It's not an automatic process. Usually it's done, pretty soon after the bureaus are notified that the collection has been paid or satisfied and it's now zero balance. And then it comes off the credit report. And obviously, if it's off your credit report, it no longer impacts your credit score.
Well, that's huge because I can't tell you how many times, one or both borrowers have had a medical collection. A lot of times they don't even know it's out there. It might have happened, and then there was a move involved, and a collection, again, is just an unfortunate surprise. So I'm glad there's now a resolution if they address it and get it paid off.
Oh yeah, it's been huge, and you've already seen the impact, right? We dealt with the Williams loan that you did. They had some medical debt that had been impacting them, but they had paid it, right? It was just showing a zero balance on their credit report. So then when you repulled credit in early July, poof, those collections were gone. You saw a huge increase in their credit scores, and you were able to move forward with that loan. Whereas the Brenner deal, which may still be in your pipeline, that was another borrower we looked at where, they had outstanding medical collections, not big ones, maybe, $50, $100 here and there. And, they're working to get those paid. So those will be deleted from the credit report. And something else along this line is, another change that's going to happen beginning next year, 2023, is the bureaus are not going to report a medical collection if it's less than $500. Right. So again, for the Brenners, right, they're not sure when they're going to be buying. They may not buy this year. It may go into next year. So they're in a situation where, their medical collections are less than $500 each. So if they just hold off and roll into 2023, those will drop off the credit report because they're less than $500.
That is excellent news and something to look forward to, and just helps me, again, educate my clients because, going into it on the front end and preparing, it's so valuable, and it's just going to help so many more people get better rates and better terms on their mortgages.
Yeah, for sure.
Well, talking about terms too, a hot topic is, where do I get my credit report, Jordan? Can I get my credit score? What are my options there as a consumer?
Yeah, absolutely. Lots of options out there. Obviously, a lot of people like the free options. So every consumer is entitled to a free copy of their credit report once a year from each bureau. And the best resource that I found is a website, annualcreditreport.com. If you visit annualcreditreport.com, they kind of take you from Equifax to TransUnion to Experian, and you can fill in information and you can get a free copy of your credit report from each bureau. They do offer an option if you want to know a credit score, then you have to pay a fee for that. But just getting the credit report once per year is free. If you want scores, you're going to have to pay for that. And one of the best resources I've found for credit scores is myfico.com. And the reason I recommend that website is you can actually see your different types of credit scores, right? Because like the last video we did, we kind of touched on how there's different scores for different purposes.
Right.
So if you go to myfico.com and you sign up for a monthly subscription or you buy the one-time report, either way, you're going to see a breakdown of the different types of credit scores. Like if you apply for a mortgage, that's the score we really focus on. But then they also let you know about your credit card score. They let you know about your auto finance score. So all the different versions of the FICO score that are in play, they're going to break it down for you. So if you see your mortgage score is 740 on myfico.com, if that client came to you and you pulled their credit, you're going to see that same score. Obviously, time comes into play. Right? If it's the same day, you should see the same scores. If you wait a few weeks, information could update, the score could be impacted. But for the most part, it's a very reliable option to get your credit and credit score.
Perfect. I know, again, it's a hot topic. Third parties, credit card companies, or banks are offering credit scores today. And sometimes it's a little surprise when we as a lender pull credit and it's different. So
yes,
again, it's just good to know that there's different credit score models out there. Credit scores change frequently, obviously with your use of credit. But yeah, our mortgage industry, again, it comes up often, which leads me to my next question. When we in the industry are pulling credit, oftentimes clients are shopping around for a mortgage, and obviously go with me, hopefully. But when they do shop, there's something called a credit window or shopping window. Can you talk about what that is?
Yeah, absolutely. People get concerned about having a credit pull because an inquiry can impact your score. But consumers, we recognize you have the ability to shop around, be it for a mortgage, an auto loan, or even student loans, right? These big ticket items, big ticket transactions. So if you pulled credit on a borrower today, there's a 30-day window. So maybe they talked to a couple other mortgage companies in the last week or two, and those mortgage companies pulled credit. Now you're pulling credit today. You're within that 30-day window. So their credit may have been pulled 3 times, but it just counts as one inquiry against the credit score. So that's baked in, it's built in to protect consumers so they don't have to worry about multiple inquiries impacting their credit score while they're in that shopping phase. And like you said, once they talk to you, hopefully that's the last mortgage credit pool, which kind of leads to another topic I wanted to speak about today, and that's just along the lines of trigger leads, right? When you apply for a mortgage or other transactions, we code that inquiry to say it's a mortgage inquiry, an auto finance inquiry, credit card inquiry. The bureaus can turn around and actually put you on a lead list and sell that to other companies looking for people in the market for that transaction. So if you pulled credit on somebody today for a mortgage, that person could end up on a trigger lead list, and other mortgage companies can buy those leads and start calling the consumer. That it could be an inconvenience for the client, right? Now their phone's ringing off the hook with phone calls from people they don't recognize. Also for you as the mortgage lender, you don't need other companies soliciting that client. So how can you protect yourself? What can a consumer do? Well, one of the best resources we found is register on a website through the FTC called Opt-out Pre-Screen. If you just Google Opt-out Pre-Screen, go on there. And I really want you to, as a consumer, as someone looking to buy a house, get a mortgage, be proactive here. Do this way in advance, maybe a couple weeks in advance of applying for a mortgage, because it's not an immediate process. If you go on there today and sign up, it can take 5 days or a couple weeks before it really kicks in and starts protecting you. So again, it's not immediate, but if you are thinking about buying a house, getting a mortgage, it's something you should do, to protect yourself and cut out on any annoying phone calls, because it doesn't just apply to mortgages. It applies to all other types of financial transactions out there where credit would be pulled.
Yeah, good point, Jordan. I think that came out a couple of years ago. And again, it's a great way to get off of those lists per se, whether it's credit cards or any type of extension of credit. But specifically, when we pull credit, it sounds like it's a good resolution to minimize or stop those phone calls if you're moving forward with a specific lender.
Yeah, absolutely. That's something. Again, it's a very it's a hot topic. It's something that we don't support. We don't condone it. Over at Xactus, that's something that we would love to see it stop. But from the bureau's side, they kind of think, hey, this is good for consumers, even though we don't quite understand that. But that's the stance they take. Really, it comes down to they can sell those leads for a lot of money.
Yeah, it is a business for them, and again, they're making money off of your information. So,
sure.
Yeah. Well, again, Jordan, we hit 4 great topics. Again, this is invaluable. I'm going to get it out to my clients right away. Again, please keep us updated with any changes in the credit industry. And again, thanks for joining me today.
Hey, thanks for having me, Chad. All right, we'll be in touch soon. Thank you.
Take care.